Hello friends, so in this video I would like to discuss one very important concept from the chapter of management of receivables management. In that, we do these calculations where we take a decision as to how much credit policy is to be given to our customers, evaluation of credit policies. In that there is one small point called as incremental approach evaluation. And the question can be very specific in the exam where they might ask you to evaluate using incremental approach. So how to do that one should know. So in this video I will be sharing with you how to do incremental approach. So for that I would first of all take up this question, and through this question I will teach you the incremental approach. This is our JKSC textbooks homework section, question number 1. You can pause the video and read this question. I'll go ahead now. I hope you all have read it. A firm has current sale of 50 lakh. It has unutilized capacity. In order to boost its sales, it is considering relaxation in its credit policy. The proposed terms of credit will be 60 days against the present policy of 45 days. So I hope you all have seen these type of questions. Present policy 45 days, proposed policy 60 days. As a result, bad debts will increase from 1.5% to 2%. Sales are expected to increase by 10%. Okay, so basically in the present policy the sales are 50 lakh. Proposed policy sales will increase by 10%. Variable costs are 72% of sales. The tax rate is 35% and it requires a return of 15%. This I am pretty sure you remember why it is given. COCD, everybody clear? Cost of carrying debtor, opportunity cost of carrying debtors should the firm change its credit period. Now students, I would first of all like to solve this question in the normal fashion, the way we generally do it, and then I will teach you the incremental. This video is not for me to teach you the whole concept of receivables management normal method. Normal method I assume and I hope that you know. Incremental I will teach, but normal method first of all I will solve and show. Okay, so I will take this, I'll just go to the notes. Okay, let's start. So I will write here, this is the normal method. Okay, normal method. In this, I will make 3 columns. First of all, I will write evaluation of credit policies. In that, I will write 3 columns, particulars. Then there is a present policy, which is of 45 days. There is a proposed policy of 60 days. Okay, let's start. So the entire format you might know, it is sales minus variable cost will give contribution minus fixed cost, but there is no fixed cost given in the question. So we will straight away then go to bad debts. So here I will do minus bad debts, and that will give you your net profit before tax minus tax will give net profit after tax, and then from this we subtract the opportunity cost, that is cost of carrying debtors, and what we get is net gain or net benefit. Whichever option, net gain or net benefit, is higher, we will choose it. Now let's go to sales. So can I say present policy will first knock off. Sales are 50 lakh given in the first line. Then they are saying that the variable costs will be 72% of sales. So in case you are not able to see the question clearly, okay, you can either rewind the video and take a screenshot, or I'll just try to zoom in a bit here. Okay, so they are saying that variable costs are 72% of sales. So variable cost is 72%. So this will be 50 lakhs into 72%, and that comes to 36 lakh. So when I subtract this, I get contribution of rupees 14 lakhs. As far as bad debts are concerned, they are saying bad debts are currently 1.5%. In the proposed plan, it will become 2%. 1.5% of course of the sales. So this will be 50 lakh into 1.5%. Okay, 50 lakh into 1.5%. So I'll do 50 lakh into 1.5%, and that comes to 75,000. So 75,000 bad debt. We will get a net profit before tax of 13,25,000. Tax rate given to you in the question is 35%. So tax at the rate 35%. So 13,25,000 multiplied by 35%, and that comes to 463,750. Okay, and then 13,25,000, if I from that I remove this number, it comes to 8,61,250. Then students comes COCD. Now COCD, as you all know, the formula is total cost into the collection period divided by 360 or 365 or 12 multiplied by the rate. In total cost, what all should we take? We should take variable cost and fixed cost both, but because fixed cost is not given, we will take only variable cost. So variable cost, can I say here, comes to 36 lakhs. Okay, 36 lakh into the average collection period currently, as you know, is 45 days. So I will do into 45 divided by 365. They have not mentioned anything about taking 1 year as 360 or anything. So we are taking 365, and the opportunity cost, as you know, is 15%. So I'll write here into 15%. So we'll take the calci, 36 lakh, okay, into 45 divided by 365 into 0.15, and that students comes to 66,575, and with that we get the net gain. We get the net gain of this option as 861,250 minus 66,575, and that comes to 7,94,675. So this is the net gain of my present policy. Now let's go to proposed policy. In proposed policy, as far as sales are concerned, they are saying that sales will increase by 10%. If sales will increase by 10%, do you realize this will become 55 lakh? Okay, 55 lakh, and now can I say on this 72%, meaning 39 lakh 60,000 will be the variable cost, correct? And the contribution will then come to 15 lakh 40,000, 15 lakh 40,000. As far as bad debts are concerned, do you realize the bad debts will be here 2% of sales, correct? So 2% of sales means it will be 55 lakh into 2%. So 55 lakh into 2%, can I say, is 1 lakh 10,000. 1 lakh 10,000 bad debts if I remove. So this will be 15 lakh 40,000 minus 1 lakh 10,000, and that comes to 14 lakh 30,000. There is a taxation of 35%, so that comes to 5 lakh 500. I remove tax from 14 lakh 30,000 and I get 9 lakh 29,500. As far as COCD is concerned, it will be variable cost 39 lakh 60,000 into 60 by 365 multiplied by 15%, correct? So on the calculator, 39 lakh 60,000 multiplied by 60 divided by 365 into 15%, and that comes to 97,644. Okay, and I get my net gain as 929,500 minus 97,644, and that comes to 8,31,856. Okay, 831,856. So what is the conclusion? Therefore, we should go for 60-day option since net gain is higher. Now students, this much can I say is something that you know. Now the same thing, even the question they ask, should the firm change its credit period? Okay, use incremental method, something like that. If they ask in the question, then you are not allowed to do it like this. You have to use incremental method. How to use incremental method? Let us understand now. One catch is there, however. As I am doing the incremental method, we will absolutely not be using these numbers for any kind of calculation for the incremental method. The reason is because when we will be solving in the exam, we won't be having these numbers, right? We have to directly do incremental from this data. So hence I will be taking this data itself, and then we will try to understand the incremental method directly from the question. Everyone ready? So let's start. Okay students, so I'll write here solution. Okay students, so I'll write here solution, and I'll write here incremental method. Okay, incremental method. Now please understand this, how to do it. We'll write particulars. Now we will write present and we will write proposed. Okay. Now the present policy we will consider as the base policy. You will understand slowly, just be with me. Present policy will be considered as the base policy. Now, what does the word incremental mean? Incremental, can I say, means additional, extra, differential, marginal, over and above, correct? That is the meaning of incremental. So now see how to do. Generally, how do we start the evaluation? Okay, evaluation of credit policies. How do we start? Can I say we start by taking sales, correct? Now, instead of sales, one needs to take incremental sales. One needs to take the change in sales. One needs to take the increase in sales. So I'm writing here, increase in sales. So, can I say the present policy sales are 50 lakh and in the proposed policy the sales are going to increase by 10%, which means it will become 55 lakh. So if I take the present policy as the base, that is 50 lakh sales if it is taken as the base, do you realize the increase in sales here will be taken as dash and here will be taken as rupees 5 lakh. I hope you are able to understand. See, in the original data, this is 50 and this was 55, correct? So what we are supposed to do, take this as the base and just take incremental data on the proposed policy. Everybody clear? Extra. Can I say increase in sales is 5 lakh? Everybody clear till here? Okay. Next we will move on to variable cost. Students, I hope you realize if sales have increased, variable cost will also increase. So I will write here, increase in variable cost. This will be dash. Variable cost percentage is 72%, right? So it will be 72% of this only. So this will be 5 lakh multiplied by 72%. And that comes to 3,60,000. Everybody clear? 3,60,000 will be the increase in variable cost. And I hope you get it. This will be an outflow for me, a cost for me. See, incremental revenues is benefit, but incremental expenses are costs. Everyone clear? So that will therefore help us understand increase in contribution. Everybody clear? Increase in contribution. This will come to 1,40,000. Next, students, after contribution, we would have had fixed cost. Now, fixed cost is not given in this question, so we are ignoring. But even if it would have been there, do you understand that there would have been no incremental fixed cost because fixed cost would have remained same in both, correct? So next, students, we go to increase in bad debts, okay? Increase in bad debts. Now, this is a tricky point. You have to be very, very careful. Everybody clear? Increase in bad debts. In bad debts, okay, I'll mark this for you. In bad debts, okay, you have to first of all write down the original bad debts of both plans and then do the incremental. Don't go for any shortcuts. Let me explain. What would be the original bad debt of plan A or present policy? It is 1.5% of the sale of 50 lakh, correct? So I will write here normal bad debts. This is 50 lakh into 1.5%. And if you remember, this will come to 75,000, correct? And as far as proposed is concerned, it is 55 lakh into 2%, correct? 55 lakh into 2%. And this comes to 1,10,000. Clear? Once these two are done, then students, we go for the increase in bad debts. We will put base year dash and there we will do 1,10,000. Okay, this will be 1,10,000 minus 75,000 and that comes to an increase in bad debts of rupees 35,000. This is how you are supposed to deal with increase in bad debts. Some people make very, very horrible mistakes. See, they say that bad debts here is 50 lakh into 1.5%. There it is 55 lakh into 2%. So incremental, can I say, will be 55 minus 50, that is 5, into 2 minus 1.5, that is 0.5. Something like this mistake they do, it is mathematically wrong. If you notice the equation correctly, it is 55 lakh into 2% minus 50 lakh into 1.5%. Students, how can you take 55 lakh minus 50 lakh outside, 2 in minus 1.5 outside? It is not possible. These are two separate numbers, calculate them separately and then do the incremental calculation. Okay. So with that, students, we complete the discussion to incremental bad debts. So here I will now just write down, therefore this will become increase in, okay, this will become increase in net profit before tax. Increase in net profit before tax, base year will be dash, and this will be 1,40,000 minus 35,000, and that comes to 1,05,000. Okay, this is 1,05,000 increase in NPBT. Now students, after NPBT there will be increase in tax, because if NPBT is increasing, tax also will be increasing. So I'll write here increase in tax. Now taxation rate given in the question is 35%. So here I'll write 35%. This will be dash, and 1,05,000 into 35% comes to 36,750. 36,750. Now see, something you can notice here. Please pay attention. If I would have calculated tax separately for both, like how I did bad debts, then do you realize here there would have been NPBT of plan A into 35%, and here it would have been NPBT of plan B into 35%. Everybody agreeing till here? Students, do you understand that I want incremental tax? Incremental tax, do you realize, will be NPBT of plan B into 35% minus NPBT of plan A into 35%. Agreeing? Now can I say here, because 35% is common, no? That is why can I say I can take 35% common outside and I will do NPBT of B minus NPBT of A, the whole into 35%. I hope everybody is understanding. This is exactly what we have done. Can I say this 1,05,000 is increase in NPBT? This entire square bracket, can I say, is 1,05,000. And on that straight away I am multiplying 35% to get the incremental tax. But this, can I say, I couldn't have done in bad debts because both bad debts rates were different. Everybody clear? We did that even in variable cost, if you notice. Variable cost also straight away 72% was the common rate between both sales, no? So straight away increase in sales into common 72%, we got the job done. Same thing, we got the job done in tax also, but can I say we cannot do the same thing for bad debts? Everyone clear? So we are done with increase in tax. So we will now get increase in NPAT. Okay, increase in NPAT. So this will be 1,05,000 minus 36,750, and that comes to 68,250. Now last student, COCD. So I'll write here increase in COCD. I will now tell you this is the second area where you have to be very careful. Okay, this is the second area where you have to be very careful. Students, again, please do as I say. Okay, in COCD, no, you should first of all understand what was step 1 of COCD. Step 1 of COCD was to first of all identify the total cost, correct? Identify total cost. Here, can I say total cost is only VC because can I say fixed cost is not there. So variable cost of the present policy will be 50 lakh into 72%, 50 lakh into 72%, 36 lakhs. So I will write down here 36 lakhs. And that 36 lakh, can I say, is 50 lakh into 72%. As far as proposed policy is concerned, it will be 55 lakh into 72%. So it is 55 lakh into 72%, and that comes to 39 lakh 60,000. Till here clear? What is the next step you do for calculating COCD? Can I say we multiply by the average collection period divided by 365? That step, student, is the calculation of debtors, where we take the total cost, we multiply by the average collection period, and we divide by 365. Everyone clear? This is debtors. Now, please understand how to do this. Focus. Can I say this will be 36 lakh multiplied by present policy is 45 divided by 365. And then here, students, do you realize it will be 39 lakh 60,000 into 60 days collection period divided by 365. I'll take the calci, 36 lakh, okay, multiplied by 45 divided by 365. I get 4,43,836. 443,836. And here I get 39,60,000 multiplied by 60 divided by 365, and I get 6,50,959. Everyone clear? Next step, students, do you realize will be the COCD, which is at the rate, the COCD rate is 15%, no? COCD rate is 15%. So can I say this will be 443,836 into 0.15, and as we had got earlier 66,575, this will be 615,959 into 0.15, and as we had got earlier 97,644. Can I say that incremental COCD will be, here I will take base as dash, and there I will do 97,644 minus 66,575, and I'll get incremental COCD as 31,069. Now a query might ask, why did you break it up into 3 points like this? Straight away that one equation minus other equation we would have straight away got, no sir, 31,069. Why so much? Because now I will tell you something which I was trying to explain to you in bad debts, variable cost. Do you people understand that the COCD rate is common applied both on this number as well as this number? Are you understanding where I am getting to? If the COCD rate is common applied between both numbers, instead of calculating COCD here and then doing incremental, rather we will do incremental on the debtors only and one shot apply 15%, you will get the same answer. I'll show you how. See, here no, I'll just push this down slightly and I will say, okay, I will say that increase in average debtors, okay, can I say will be dash, and there I will take 650,959 minus 443,836, and that comes to 207,123, and then straight away I will do increase in COCD at the rate 15% dash, and this 207,123 into 15% if I do, I will straight away get 31,068 or 069, because it is 068.45. You can keep it at 068 also, no problem. 069 also, no problem. Okay, so just for rounding off and to match things, I will take 069. In exam, please feel free to keep it at 068, no problem. So I hope students you understood that this answer and this answer both are same only, rounding of difference was there, otherwise both are same. So in exam students we need not do this. You can also separately calculate COCD and then do the incremental, no problem. But better that you do the way ICAI is doing. Now students, we will go to the final answer here. Okay, in the final answer I will write increase in net gain. Everybody clear? After increase in COCD, there is increase in net gain. Here, of course, it will be dash. And here, do you realize it will be 68,250, which was the increase in NPAT. Straight, can I say minus 31,069. Everybody clear? What I will do is, first of all, I will mark this also for you in black only. Okay, this also I will mark in black. Everyone ready? And then do you realize that only the blue items you have to check here, correct? So this 31,069, do you realize will be in bracket here because it is increase in COCD, increase in cost. So 68,250 minus 31,069, and that comes to 37,000. Okay, this is 37,181. 37,181. Everybody understood till here? Now what does this 37,181 mean? Is it the net gain of present policy, net gain of proposed policy? No, it is the net gain of proposed minus net gain of present. This particular number, do you realize, is the additional net gain that the proposed policy has over and above present policy. Everybody clear? So can I therefore say that since incremental or increase in net gain, okay, is positive, I hope you are understanding, we should go for proposed policy. Okay, we should go for proposed policy because extra money we are getting, no? That is how you do incremental. One last thing, actually 2 points before we end this video. I hope you know what this 37,181 actually is. If I go to my earlier solution, you saw we had two different net gains. Let us calculate the difference between this and this. Okay, so 831, 856 minus 794, 675. I hope you realize exact 37,181 is the difference we are getting. So I hope you got complete clarity on what this incremental is all about and how to calculate in the exam. Do this only if the question asks you to calculate on incremental basis. Otherwise, normal calculation only you do. Second point I want to tell you is, what if there were three plans? There is one present and there were two proposed, for example, one present and two proposed. Then students, same thing you should do. Present should be kept as base. Okay? And these two will be taken as increase in or whatever. Everybody clear? So to give you an example, I'll just write here. Let's say there is present policy, there is proposed policy 1 and proposed policy 2. Let's say the sales, the normal sales of present policy is 100. Here it is 120. Here it is 130. So if they are asking you to do on incremental basis, tell me what will you do? On incremental basis, do you realize you will write increase in sales? Everybody clear? Increase in sales. Base year will be taken as dash. In proposed policy 1, increase in sales will be taken as 20. In proposed policy 2, increase in sales will be taken as 30, not 10. I hope you are understanding. Compare the second policy also with present policy. Don't compare second with the first. First is not the base. Base is present policy. So from present policy, how much it is increasing by? 30, no? So take 30 here. Like that you should do in case more than one proposed policies are given. Everyone clear? So with that, students, I finished the discussion to explaining to you incremental approach. I hope you benefited from it. Thank you very much. Take care.